Well, hello everybody. Welcome to the Financial Tangent Podcast. We're back after a couple of weeks off, um, and we are super excited to be jumping back in. My name is Ben, if you don't know me already, and I'm here with Rich and Chloe. I'll let them do a little intro.
No, I'm Chloe.
I'm Rich. Had a little bit of a health scare a few weeks back, but I'm healing process right now, so we're back at it. Absolutely.
Absolutely. Good to be back. Glad you're good.
Oh, yeah.
Yeah, thank you. Appreciate it. So I think we're going to talk about money market accounts
Yep.
this episode, right?
So, this is going to be for anybody, looking to just dive in and learn a little bit more, about the topic. It's kind of something that, maybe isn't always in the spotlight of personal finance kinds of things. You kind of hear more about other topics before this one, but it's super important because there's a lot of really cool things you can do. That can really benefit you in the long run, and just overall just kind of as you build and maintain healthy habits financially. So I know Rich has extensive experience with money market accounts. I've one that's connected to my credit union, but I don't really know if Chloe's had too much direct experience yet with them or not. So I'll kind of maybe let each of them jump in a little bit more, and then maybe we can fire some questions at Rich and kind of maybe start a conversation.
Absolutely. I think we have a lot of questions on the dock here. My experience with money market accounts is none. I have a money market fund, but not an account. So,
Absolutely. Think of a money market as something that it's a place to park short-term cash. So if you don't want to put it in the stock market because you're going to need that money, within a short term amount of time, a money market is perfect. And basically, the gist of a money market account is think of it as a bond fund, okay, but super short term. So it's going to invest. You put your money in a money market account or a money market fund. It's going to take your money pooled with a whole bunch of other people's money, and they're going to and that bond fund or that mutual fund or sorry, money market manager is going to invest in super short term debt instruments, 30, 60, 90 days. So you're really not at the whims of any interest rate fluctuations or anything like that. All it's basically doing is just trying to eke out a little bit more interest than what you would earn in a regular savings account. So the net asset value of your money market account, your money market fund, they always strive to keep it at $1. But what you're going to earn, so you're going to, it's going to take that money, invest in a 90-day debt instrument. It's going to return that money after 90 days plus some interest. So you're going to constantly get a stream of dividends coming back, or interest. I shouldn't say dividends, but interest coming back from that money market. And you're always going to keep your original dollar plus any interest that you've earned. And the goal really is to just beat out what you normally what a bank would give you in a savings account.
so you mentioned net asset value. Can you explain what that is and maybe why that's important to
Sure,
have that?
absolutely. So the net asset value of, let's say a regular mutual fund, right, is let's say that net asset value is $100 per share, meaning you invest in $100, you buy the outstanding value of that mutual fund is, let's say, X amount of dollars divided by the number of shares available is, and then that's your net asset value per share. With a money market account, it always strives, everything's always $1. So if you want 1,000 shares of a money market, you're going to invest $1,000 and you're going to get 1,000 shares.
I see. Okay.
So
In the hopes that you will get maybe like I don't know, 5% return or something.
Yeah, absolutely. That's about what they're going for these days right now, about 5%. So you're going to get your dollar, it's always going to keep your dollar out there, but you're going to earn interest on top of that dollar.
Okay.
Yeah.
So I think that kind of segues into maybe just a good like understanding of what APY is, right? So you hear 5% APY. So Rich, what does that stand for? And is that
Sure.
something, how important would that be to somebody shopping for a money market account?
Sure, absolutely. So that's your annual percentage yield. So that is on a yearly basis, that's the average return that that money market is returning right now. And before our call, I was just poking around online a little bit, and we have some money in, my wife and I have some money in the um, Schwab's basically the Schwab Value Advantage Money Fund Investor Shares, SWVXX. Its yield is 5.14%.
Huh, nice.
Yeah, absolutely. Now that'll fluctuate. Interest rates go up a little bit over, if they go up, that 5.14 is going to go up a little bit. If interest rates go down,
Gotcha.
it's going to go down a little bit, but it's always going to strive to keep that dollar versus like, let's say you invest in a long-term bond fund, your your initial investment may ebb and flow with interest rates. I think we talked about that a few episodes back, but with the money market, its goal is to keep that dollar stable, and then you're going to earn interest on your money market account.
Gotcha.
Your interest will ebb and flow, but
Gotcha. Very cool.
So,
do I have to have a minimum balance with a money market account? Would it depend maybe on the institution, or would it be like, do you have to have a certain, like, you have to start with this amount of money?
well, it's funny. I had this up here. The Schwab Value Advantage Money Fund, its investor shares, the one that my wife and I are in, 5.14%. There's no minimum investment. Now, if you choose the Schwab Value Advantage Money Fund Ultra Shares instead of investor shares, Ultra Shares,
Okay.
your minimum investment's $1 million, but
Okay.
instead of 5.14, you'll earn 5.29.
Gotcha. So
18/100%.
But if you
so
have a
it's dependent upon the shares.
decent
Right.
difference.
Yeah. So, I mean, and I think the goal there is that because it's a higher minimum investment, that they can take more. That's probably doesn't have a lot of influence
Gotcha.
coming in and out, so they can probably be a little bit more aggressive in there.
Sure. So it ultimately kind of depends on the class maybe of the shares, like you had mentioned.
Yes.
Ultra.
Yeah. Absolutely.
Yeah. So that's something to maybe pay attention to. Like if I'm out looking around, that's maybe something to pay attention to, as an option with either if I'm doing the Schwab or the Fidelity platform, you want to understand that maybe, there are differences, just maybe like common stock, like you have class A shares and you have class, B and so on and so forth.
Absolutely.
Cool. Chloe had mentioned earlier, as we were getting started about, like money market accounts versus money market funds. Are those words interchangeable, or are they actually different things? What would you say, Rich, from what you see?
I've always invested in money market funds, let's say through Schwab or one of the brokerage account. Vanguard all the big ones have a money market fund. And the beauty of that is that you can invest your money on a Monday, and then 2 weeks later, you can pull that money out, right? Let's say you need it, something came up and you have
Gotcha.
an emergency or something, your furnace blew and you need,
Sure.
pull out. Now, if you go to a local bank, there's certainly nothing wrong with going to your local bank or your credit union. I certainly like to support local, but if you open up a money market account through a bank or somebody, you
Sure.
have to physically go there, transfer the money over,
Sure.
all that stuff, and versus using like an online brokerage account. So it's a little bit easier, in my opinion.
Nice. Nice.
Yeah. What else you guys have for me?
Well, I had a question about what the difference is between a money market fund and a bond fund. Are they essentially the same?
Yes, absolutely. Now they're essentially the same in theory, right? A money market fund is going to be a lot more short term with its investments.
Okay.
So if, as a matter of fact, I was looking at that earlier. If I'm looking at Schwab's Value Advantage Money Fund, I'm looking at a holdings report, and they have investments in short-term debt instruments.
Mhm.
Total net assets, 295 billion. Am I reading that right? So that shows you the amount of money in these. But for example, here's a debt instrument through Barton Capital that I purchased, right? It has a maturity date of, now this thing must be a little couple weeks old or something. I don't know the date this is printed, but
Sure.
maturity date of August 2nd. What are we at? We're recording this June 20th. Maturity date of August 2nd, maturity date of June 21st, June 24th, September 23, November 20th, August 9th, August 9th, August 21st. So you can kind of see a pattern there of just, 30, 60, 90 day. And it's real conservative so that if there's any wild interest rate swings, it doesn't matter anyway, because these are so short term that you're going to get your money, the money's flowing right back.
Okay.
Yeah.
And
Nice.
are there
Nice.
bond funds that are short term as well?
Well, there are, but maybe not as short term as a money market account, right?
Okay.
So maybe you could buy a short term bond fund where maybe with maturity dates of like a year out, right? Well, if the
Okay.
Federal Reserve raises interest rates,
Right.
that value of those bonds that bond fund has invested in are going to go down because interest rates went up, and
Gotcha.
Okay.
Gotcha.
net asset value. That's where you get
Yeah.
your fluctuation in bond funds.
Okay.
Gotcha.
Quite understood why people invest in those, because they, in the end, they fluctuate with interest rates. Your initial investment does.
Gotcha. Huh.
Yeah.
So, what would be, what does it mean when it claims that it has a 7-day yield? Is that, how common is that? And what does that mean ultimately?
I believe that means 7-day yield. I believe means that was the average annual yield for the last 7 days. But think of that as an annual yield,
Okay.
but it's average of the last.
So okay. So would it be like the third week? So for example, the third week of, so we're in the third week of June right now. So would it be the third week of June last year, like year over year in comparison?
I believe it's
Almost?
the last 7 days, but they're factoring in a full year of
Oh,
interest,
okay.
right? So everything's annual, everything's a year, but they're saying in the last 7 days, this thing's averaged an annual rate of 5.1.
Gotcha. So it's like this date and this date and this date and this. So if you have like 5 consecutive days, we'll just use like business week, for example, or
Right,
7,
yeah,
right?
absolutely.
So they'll take the yearly of each, the yearly year over year, and then they'll average it out. Is that ultimately what it is?
Yes, yeah, absolutely.
Gotcha. Sorry, I had to put it in my own words to fully grasp it. So hopefully that helps anybody else listening. So cool. Do you think that listening to Dave Ramsey's advice, right? He talks about keep, X amount of, months of income, right, in an emergency fund, right? So I think it's like he says like 6 months or something like that, or maybe it's 4 to 6.
That's a perfect
like. Would you
place
put that?
your emergency fund?
Would you put that kind of money?
I'm sorry.
Okay.
Yeah,
I said
that's a
okay.
perfect place to put, a money market account as your emergency fund. Absolutely.
Nice.
The perfect.
Nice.
Or if let's say you're saving up for a house, a down payment on a house, and it's a year away, that's a perfect place for it.
Nice.
Saving up for a car or something, major purchase, or even a vacation or something.
So that leads into another question of the difference between a high yield savings account and a money market account or fund. Like what are the differences between those? And
I'll be honest with you, I don't think there's going to be a huge difference between a high yield savings account and a money market account.
Okay.
You have to look at, like what Schwab offers. I can actually look it up real quick here.
But what is a high yield savings account? Because a money market is just, like you had said, investing in short-term bonds. Is that what a high yield savings account essentially does as well? They just slap a different name on it or something?
Yeah, it's probably, yeah,
Or
definitely.
is that like certain banks will just are better than others and just offer higher like percentages?
I'm looking at USA Today. Now, I don't know when this article is. June 7th of 2024. It is claiming your average percentage yield on a Schwab savings account, high yield savings account, is 0.48%. Okay, now they talk about, so you have your earned interest after 1 year is $48 for your initial deposit. So you're far better off you going into the Schwab money market account. You're getting your 5% versus less than 1%.
Okay.
And to contribute, because I did some light research on the topic as well, like before we started talking. And it says, depending on your needs, and this is according to NerdWallet, it says depending on your needs, a high yield savings account might help you save more, but also at the same time, they say that some high yield savings accounts beat money market rates and have lower fees. So they don't really seem to say one way or another. So maybe that's also part of what you're seeing too, Rich.
Right, absolutely. I've always gone right to money market accounts,
Yeah.
Absolutely.
So, well, cool.
Yeah.
Cool.
Yeah, I think.
We cover that one?
Yeah, I think so.
Excellent.
Yeah.
I'll have to dig into high yield savings accounts more because
we can look.
I'd like to understand more of like what exactly do they invest in and
right.
Just to know. But
For sure. Yeah, I'm seeing like right now this is on NerdWallet updated as of June 20th, which is today. They say the best money market accounts in parentheses is up to 5.3%, which is VO Bank, Cornerstone money market account. You can put $0.01 in there for the minimum balance to get the APY. It's got 4.5 stars of 5. but there's a few other ones. I mean, Discover's got one with $1 minimum balance and 4%, or a few others: Quantix, Sally Mae, ALI, Everbank, First Foundation Bank, kind of all ranging from 4 to 4.9 to 5. That's as of today. So I guess in this podcast we turn to the nerds a little bit. I'll quote their little slogan. Hopefully they appreciate that. They don't dislike
the shout out.
So, but cool, very cool.
Excellent.
So, how long have these things been around, money market accounts, would you say? I mean, I don't think they're anything new, like an ETF or like a cryptocurrency or anything like that.
I think for decades, yeah.
Yeah, I think they've been around for a while. So, yeah. You wonder if if people are using them less and less. 1971?
Yeah, according to the internet. Believe what the internet tells you.
So, well, cool. Does anybody, if anybody has any questions, comments, concerns, just throw us a comment below. We will respond to it. And let us know what your thoughts are, on this. And maybe we could do, I don't know, like what do you guys think? So you hear about like what I just looked at on NerdWallet, all these different platforms. Would you take a lower APY if you had the account like from your bank or from your credit union, like accessible right there, that you could just transfer money back and forth super easily? Or like, would you guys like, what would you guys think, about like creating a whole another account to just move some money for a little bit? Would you guys do that, or would you guys not, because it's maybe a little bit more of a hassle? What do you guys think?
It's a good question, Ben. I think my initial response would be convenience. Like if we're talking, let's say in the account that I have now that's convenient, let's say it gets 3% versus going to my bank and opening up a money market account to get 5%. I think
Sure.
I stay with what's more convenient because I'm parking my short-term money there, so it's not really gonna make a difference. Like if that's something
Sure.
that I park for like 10, 20 years, yeah, that would make a difference and I'll probably reconsider, but it's
Sure.
not gonna make me not buy a house or anything like that. I think that's kind of where my stance is. Like, I don't know,
Yeah.
I'm already so busy, just having the convenience of clicking on the computer is easier for me, but I don't know. Dad, what do you think?
Yeah, I just like running everything through a brokerage account, and where you can move everything around.
What about you, Ben? What would you pick?
I'm kind of in the same boat as you guys. Do it conveniently, and do it, through either your bank or your brokerage, because that's where your money is. You can click back, and I don't think it's worth, in my opinion. I agree. I don't think it's worth setting up like a whole another account with, run all your, like, I guess, like I think about it, like the more you put your routing numbers and all your account information out there, the higher you expose yourself to risk, of fraudulent activity or anything like that, too, so there's intangible trade-offs too, for sure. So, but yeah, everybody listening, let us know what you think.
Yeah, that's a good question.
So,
Great episode, guys.
Yeah, thanks for joining, everyone.
Next week.
See you guys. Later.